Tom Lee is back sharing his insights into the market right now. Some very interesting insights that we absolutely have to break down in depth in this video here. We're also going to be covering some of his favorite names moving forward over the next couple of weeks and months here, and also talking about some of your guys' favorite names that we cover on this channel here, guys. So we have a lot to cover in this one, but again, before we get into all of that information, if you guys do enjoy these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot, spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you're subscribed, turn on notifications so you're notified every time these videos do end up going live. And oh my God, again, got to give a massive shout out to all of the members of the Less Trades More Profits community here. I'm going to throw up some pictures of my gains for today here. Really solid. Throwing up some of the images of the members' gains. Guys, you guys aren't seeing gains like this anywhere else. If you guys do want to hop in there and learn these skills to take full advantage of everything the market has to offer, guys, and again, you might seem complicated. It's actually very simple and easy to learn. Again, use code TRADE, get 30% off your first month down below, and get access to all of the educational course curriculum videos, the daily private live streams, the full watch list of stocks and cryptos that are about to explode before they do, the pre-market plans, the macro research reports, the single stock research reports. Guys, this is the one-stop shop if you guys want to have long-term success in the market. If you guys want to hop in, we'd love to see you in there. But first, let's roll this Tom Lee clip here and get right into everything.
Now, last week we talked about how we saw 5 potential signs that confirmed the market made its low. And the 5th one we were waiting for was for the S&P to retrace 50% of its losses or close above 54.91. But that did happen on April 25th. So I do think that we now have a constellation of factors here telling us the market made its structural low and the probable low for 2025. I think we've got some evidence of that in this week's macro results. On Wednesday, there was 3 economic reports that were critical: employment cost index, first quarter GDP, and March core PCE inflation. But exhibit A of a bottom is the GDP for first quarter. It was a negative GDP number, the worst GDP growth since first quarter 2022. But before you start to think the economy has slipped into a recession, keep in mind that the reason GDP was negative in the first quarter was that the US had a huge surge in imports. Companies were ordering a lot of imports. Now, imports subtract from GDP because they're made from somewhere else. So, as we bring it in, it's actually subtracting from GDP. But we pulled in a lot of imports, but inventories, which is what would show up here, didn't rise as much. So it's like a mystery. What happened? We imported a lot of stuff, but didn't show up in inventory. Part of this is because inventory goes into this mysterious place called the bonded warehouse, which some people have talked about. And this is from Craig Fuller talking about ships at sea. And bonded warehouses store goods without paying tariffs. But with negative GDP in the first quarter, I think it was pretty well socialized, meaning people knew about it. But the rest of 2025 is going to be quite messy because you'll get a rebound in second quarter GDP, but then Q3 and Q4 GDP this year have a lot of tariff distortions. But I think that's the thing. The market's going to focus on 2026 and whether or not tariff policies are going to lead to upside to growth next year. If you look at Polymarket, they're pretty skeptical. They're putting a 65% chance of a recession in 2025. But I actually think that's overly pessimistic, and it's not too late to reverse this as long as we get some tariff clarity.
So if you guys were paying attention to some of the videos here, or some of the videos that Tom Lee has been posting, he's talked a lot about the signs that the market could have recently bottomed at those recent lows that we've seen for the year 2025. Now, again, he goes on to say that the market's really going to be focused on moving into 2026 here. But what's very interesting are some of the economic data, pieces of economic data that we've seen not only this week, but also today, which I want to cover before we start getting into these individual names. Because again, in order to make better decisions in the present, guys, one of the main 3 pillars of the process that I use going into the market every single day is understanding the big picture. And when we move over here, again, the US economy, when we talk about GDP, that was released on Wednesday, the U.S. economy contracted for the first time in 3 years for the first quarter, swamped by a flood of imports as businesses race to avoid higher costs from tariffs, and underscoring the disruptive nature of President Donald Trump's chaotic trade policy. Now, what's very interesting here is that over the last couple of weeks, we've kind of seen some different reports on what's actually been happening with these business owners that are importing a lot of their goods from other countries, specifically China. Some of them, again, as we saw in this import data here, were importing a lot of goods to try and get ahead of these new tariffs here. But we've also heard stories where a lot of these business owners are foregoing the opportunity to import a lot of these goods to kind of avoid these tariffs, and are kind of hopeful that trade deals are going to be reached and they're going to have more guidance moving forward to have a better understanding, again, of where their business could go over the next couple of quarters here. Now, additionally, today, we received some very, very important economic data, and in my opinion, one of the most important pieces of economic data for this week, and that was non-farm payrolls, which includes the unemployment rate here. So total non-farm payroll employment increased by 177,000 in April, which was actually more than what the market was expecting, and the unemployment rate was unchanged at 4.2%. Now, what's interesting about this here is that the market, as you guys have seen today, has actually taken this data very positively, which, again, when we think about where people want to see rates in the near future, well, this piece of data here isn't really going to support rate decreases or rate cuts coming in the very near future, and that's exactly what we're seeing on the Fed Watch tool here. We've been talking about this a lot, these expectations for rate cuts going into the end of the year. We did see the expectations for a full percentage point in cuts from the Federal Reserve for this year at about, those projections were about 45% here, and we've seen these get walked back down here, as you can see, to about 35%. Now, a lot of people have been also expecting a rate cut to come in May. I've been telling not only you guys on YouTube here, but also the private trading community, I really don't see the reason why we are going to be getting any of these interest rate cuts in May. The Fed is not going to have enough information in order to justify that rate cut in May here. They are still very, very worried in looking at the economic data with tunnel vision and really focusing in on inflation versus looking at the potential for declining growth and unemployment moving to the upside there. Now, when we take a look at June here, we are also seeing something similar happen. So June made a little bit more sense, but we are now seeing a 60% probability here of no rate cut in June. So these developments here are going to be very, very important to look at over the next couple of weeks here as we get into June, because the market could start to see a little bit of volatility as they were projecting rate cuts coming in the near future, and that may not happen. So again, the other thing that I want to briefly touch on before we start talking about these individual names here is the big picture of kind of the broad market here as it relates to the major indexes. So we're looking at the S&P 500 right now, the SPY. Now, what we have right here, this zone that we've talked about a lot, between about 561 to right around 565, is a prior all-time high zone that I like to call the Liberation Day zone now, because that is exactly where we were trading before we got this significant tariff announcement on Liberation Day. Now that we are back to these areas here, me personally, and this is something that we were talking about a lot on the private live stream this morning with the group, I personally do not see the argument for the market to continue higher here in the short term unless we see some significant developments in trade talks, because what we have to realize is, well, back in here, we had way less tariffs than we do right now. So why would the market then trade higher than where we were at previously? To me, the argument here is not to be getting long, it's to be much more cautious at these areas here. But on the other side too, we are seeing that China says it's evaluating possible trade talks with the US. We did see those developments this morning. And again, those trade talks can easily start boosting markets and buying pressure coming back here, as a lot of people were taking their chips off of the table in the beginning of this year. So that was really a long-winded way of saying that at this point in this cycle that we are in and where we are at on the charts, you want to be a little bit more cautious at these levels here. We need to see some more positive developments and confirmation out of the market and the news that this market is ready to head higher. Again, it's better to be late than wrong here. Now, this is going to be a little bit of a long video here, guys, so sorry about that. But now let's get into some of these individual names, especially as it relates to some of the things that Tom Lee is invested in the Granny Shots ETF here. And for those, we're going to be talking about Palantir and MicroStrategy, and then we're going to get into some of the ones that we like to talk about here on this channel, Sofi and HIMS. Now, when we move over here to Palantir, again, this is a name that we talk about time and time again on this channel here. It has brought significant amounts of gains for many retail investors here over the last year and a half. We are heading into earnings on Monday here, and like I've said in the past, I do believe that the market in general is going to hold Palantir to a little bit more of a higher standard this quarter here and really in the future, just because of the significant amounts of gains that it has witnessed over the last year and a half, and also the valuation that it's currently trading at here. But what I will also say is, again, we've talked about this a lot, in terms of the defense spending, and really this was kind of the excuse here for Palantir's kind of initial move down back into the 70s earlier on this year. But we did receive this report today that is going to be very bullish for Palantir and a lot of these other defense contractor companies here. I know Palantir's not only a defense contractor, just kind of saying that Lockheed, Raytheon, and all of those other names could benefit from this budget increase here. So Trump's fiscal year 2026 budget would increase defense spending by 13%. If approved, we definitely could see a lot more money go to Palantir. Again, we just saw yesterday that new Titan project was rated very highly by the US Army. And looking at this chart here, we are very close here to all-time highs. We will see what happens on earnings. I'm going to do a video kind of previewing Palantir and HIMS earnings this weekend. So if you guys are interested in that, make sure you are subscribed, turn notifications on. That is not one that you're going to want to miss. Now, let's talk a little bit about MicroStrategy, but in order to talk about MicroStrategy, we obviously have to talk about Bitcoin. Now, if you've been following me on Twitter, you would know, again, let me actually pull this up on another chart here just so we can get the zones. This was the initial move that we called out on Bitcoin up into this zone here. Remember, we've been looking at those two different scenarios. We're either going to break up into this zone here and reject, or we are going to move through this zone, which is exactly what we're doing, move up towards that $100,000 area, retest potentially, and then go for those all-time highs. Now, again, I did alert you guys to this on Twitter recently that Bitcoin was setting up to make some very significant moves to the upside here. That's exactly what we're seeing over this kind of 96,000 area. We could easily see some positive developments over the weekend here with Bitcoin pushing it up to this 100,000 area. And again, something like MicroStrategy will definitely benefit from that here. Very strong looking chart. Could easily see these upper levels here of above 400, 440, and if Bitcoin really gets going, you could end up seeing MicroStrategy going to take out those kind of trailing 12-month highs. Now, let's shift our focus here a little bit to another name that is going to be reporting earnings on Monday, and that is HIMS. So taking a look at this chart here, again, HIMS, at the current time that I'm recording this video here, is having a phenomenal day. Remember, they have initiated that new partnership with Novo Nordisk. They are building out a roadmap here, which again is going to completely lower the litigation risk between Novo Nordisk and HIMS, which is definitely a positive for HIMS moving forward here. And again, just taking a look at the user growth and the subscriptions growth of HIMS over the last couple of years here, this is absolutely awesome growth to see. So it is going to be very interesting to see how the market reacts to HIMS earnings on Monday here. But again, we're going to be talking a little bit more about HIMS in a video that is most likely going to get released tomorrow. So again, make sure that you guys are subscribed, turn on notifications so you don't miss that one. And again, Novo Nordisk, for those of you guys that have been paying attention, that is the most recent long-term position that I have added to my portfolio there. The full thesis is within the Less Trades, More Profits community. It's a full long write-up for you guys. So again, if you're interested, make sure you check out that link down below. And then I want to wrap up this video here, guys, briefly talking a little bit about SoFi here, mainly kind of the price action that we are seeing, because again, I know a lot of you guys as investors in this one are a little bit disappointed with the results of really just the trading action of SoFi after their very, very solid earnings that was released earlier on this week. Remember, we have talked about that European expansion that has kind of been leaked out to everybody here, that is going to be coming in the near future, that is going to increase their addressable market, increase their revenues. And again, this is a very, very solid name moving forward here. Remember, I own this one at about $6.55. This has been a very, very high performer for me over the last kind of year here. And I do see this one having the ability to break out and get to those all-time highs here in, let's just say, the next 2 or 3 years, making significant moves. And that is what I want a lot of you guys to start thinking about. I think many people will look at, let's say, after hours trading action or the results on one day and either get, let's say, too happy with big moves to the upside or very disappointed and frustrated with movements out of the stock that they may not necessarily think are warranted. Guys, if you are an investor, you have to think with a long-term vision. It is going to be completely different than what we are doing when we look at those short-term trade ideas. The roadmap for a lot of these companies is going to take a significant period of time in order to play out. And again, SoFi has performed very, very well here since our entry back down in this area. This is not a name that I am worried about at all for the foreseeable future. And I think this one is going to have a lot of success for investors and shareholders over the next 3 to 5 years here. So guys, that is going to wrap up this video. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos get posted live. But until next time, guys, I will see you. Peace.